All right, let's talk about SoFi Technologies. You've probably heard the name, right? It's one of those stocks everyone's watching. But here's the thing. If you pull up the chart, it's like it has a split personality. It's telling you two totally different things at the same time. So what we're going to do is decode these signals and try to figure out where SoFi is actually heading. Okay, so let's get our bearings. Right now, the price is sitting at $28.21. Just remember that number, because everything we're about to unpack, the good, the bad, and the ugly, it all revolves around this specific price point. So that leads us to the big question, right? Is this thing about to take off like a rocket, or is it about to fall off a cliff? The charts, well, they've got clues, but right now they're just not playing nice with each other. They're basically arguing. And, this is what makes SoFi so interesting to look at right now. It's like there's a full-on battle happening on the chart. You've got this long-term strength going up against some serious short-term weakness. Our mission is to get in there, untangle this mess, and figure out who's really in charge. Okay, first up, let's tackle the big picture. I'm calling this SoFi's split personality because, well, you're about to see why. This is the main puzzle we've got to solve. And boom, right out of the gate, we've got a head scratcher. On one side, you have this risk thermometer that says, hey, this stock is low risk. So you think, great, it's stable. But then you look at the other side and the technical score is screaming bearish. So wait a minute, how can a stock be safe but also be pointing down? That's what we need to figure out. Okay, to get why it's rated low risk, we have to talk about something called beta. Now, don't worry, it's simple. Think of beta like a stock's personality. If the market is a big party, a beta of 1 means the stock is just dancing along with everyone else. If it's above 1, it's that loud, dramatic friend who's all over the place. But if it's below 1, it's the chill one, less volatile, just kind of steady. And what do you know? SoFi's beta is just 0.542. That's super low. It basically means that historically it's been about half as jumpy as the rest of the market. And that's the key right there. That's why it gets that low-risk stamp of approval. So, let's recap the mystery. We've got this fundamentally stable, low-volatility stock, but it's got all these short-term warning lights flashing. It just doesn't add up. So to get to the bottom of it, we have to play detective and look at both sides of the story. Let's start with the good news, the case for the bulls. All right, Section 2, the case for an upside. Here, we're going to put on our optimist hats and look at all the reasons why someone might be really bullish on this stock. What's the foundation that's getting people so excited? If you just tune out all the day-to-day noise and zoom out a bit, the big picture for SoFi actually looks pretty darn solid. The whole argument for the bulls isn't about some quick little jump in price. Now, it's built on something much stronger, a long-term trend that the data makes really clear. Okay, now look at this. The 50-day, the 100-day, even the 200-day simple moving averages. Think of these as the stock's long-term memory of where it's been. And right now, they are all sitting way below the current price. This is textbook stuff, folks. It's a classic sign of a really healthy, established uptrend. It's like the price is just floating on top of its own past. And that is exactly what a bull wants to see. And it's not just the averages. The hard stats back this up too. This thing called a linear regression, which is really just a fancy way of saying a smart trend line, shows a solid upward path. But here's the kicker. The math says that based on this trend, the price should be up around $29.89. And since it's not there yet, the bulls are arguing, hey, this thing's on sale. It's undervalued. And to put a cherry on top of this bullish Sunday, the risk-to-reward ratio is sitting pretty at 1.71. What does that mean? Well, simply put, for every $1 of potential risk, there's a potential reward of $1.71. I mean, you don't have to be a Wall Street genius to know that's a setup that looks pretty darn good. Okay, but hold on. That's only half the story. It's the happy, optimistic half. The long-term view looks great, sure, but the moment we zoom in on the here and now, everything changes. So let's flip the coin and look at the other side, the warning signs that have the bears growling. And I'm not kidding, it's like a completely different stock. If that long-term chart was a nice, calm ocean cruise, the short-term chart is like hitting a storm. The waters are getting choppy. You can just feel the momentum starting to shift. And here's exactly why. Remember those moving averages we just loved a minute ago? Well, take a look at the short-term ones now. The 5-day, the 10-day, the 20-day, they're all sitting above the current price. This is the complete opposite of what we saw before. It's a huge sign that right now, in the immediate moment, the stock is losing steam. It's falling behind its own recent pace. Now, one of the best tools we have for spotting these kinds of momentum shifts is called the MACD. It sounds complicated, but all it does is watch two different trend lines and see how they're getting along. And when they start to move away from each other in a bad way, yeah, that's a big red flag. And guess what's happening with SoFi? You got it, the MACD is negative. This is another one of those textbook signals, and it's basically shouting that the bears are in control right now. They're the ones putting all this downward pressure on the price. All right, now you're going to want to lean in for this one because this is a biggie. We're looking at the VWAP, the volume-weighted average price. Just think of it as the real wholesale price that the big money, the institutions, are paying. For SoFi, that price is all the way down at $11.47. Now look at the current price. The gap is a massive 145%. That, my friends, is a potential red flag waving in the wind. It suggests this stock has gotten way ahead of itself and might need to come back down to earth. So there you have it, a strong, beautiful, long-term trend crashing right into some really nasty short-term headwinds. Which brings us to the final and most important question of all. What happens now? What are the signs we need to be watching for? Well, when you run the numbers, it looks like the bulls and the bears are in a dead heat. Seriously, there's about a 35% chance it goes up, a 35% chance it goes down, and a 30% chance it just goes nowhere. It's a perfect technical stalemate, a real tug of war. So if it's basically a coin flip, how in the world do you know who's winning? Simple. You watch the price levels. These are the lines in the sand. If SoFi can break above that resistance at 29.08 and stay there, then the bulls have taken back control. But if it slips and falls below that support level at 26.50, it's game over for this round, and the bears have won. So let's drill this down. Here are the only three numbers you really need to watch. 29.08, that's the ceiling the bulls have to smash through. 26.50, that's the floor the bears are desperately trying to break. And right in the middle, you've got 27.37. That's the pivot point, the magnetic center of this whole fight. The price is probably just going to dance around that number until one side finally gets the upper hand. And really, that's what it all comes down to. It's a classic standoff, a Wild West showdown. You've got the long-term strength holding up the floor and the short-term weakness pushing down on the ceiling. The data has shown us the battlefield. It's given us the key levels to watch. Now, all we can do is wait and see which side is going to blink first.